And I hope through this whole presentation you'll enjoy it and get something, from this presentation. So without further ado, I'll just move forward with the presentation now, and you'll see how it goes. So as usual, the disclaimers, telling you that CFD is a leverage product. So before you start trading it, you should better understand the product well, and because although it's highly leveraged, and so although your profits can be maximized, by a few number of times of your investment, but your losses can be maximized as well, so you better need to understand this product well before you start trading in CFDs. Then there are few other risks that I need to go through, like the liquidity risk. It's an OTC product, and then if you are short in, let's say there's a right issue, then you might have to liquidate your positions as well. Those are some of the issues which you must know before you start trading, but because this presentation is more towards the US market, so I'll be covering more of the US market and how you can trade in particular market. And in order to know if and I assume, when I started this presentation, I assume that everyone at least know what CFD is and how you trade CFDs. And for those who are very beginners, there is another in our course we have called A to Z stocks, which deals with the basic CFD product. So anyways, you can ask questions if you don't get anything during this the whole presentation. So as I said, it's a leverage instrument. Profit and losses are magnified, and suitability is very important. So it's not for everyone. You need to have low risk tolerance, in order to, because as I mentioned, you can have huge profits but huge losses as well. Execution of orders are done. Those who have already been trading or who already knows, then they would understand that we have two types of CFDs here: the share CFDs and the DMA, and the differences between them. But because the topic here is more towards US market, so I'll go towards the US market right now. So if I ask, if you ask the Singaporean people, why do they hesitate, trading in the US market, then the
I think,
few of the
Sam, we've got a
reasons, many
poll,
reasons,
right?
what you get is that,
We've got a poll
oh
for
yeah,
our audience as
we
to why they don't trade in
right,
US stocks. So I'm just going to launch the poll right now. So
correct, okay, thanks, Mel.
just give everybody a few minutes to just fill in the poll as to why they're not trading the US stocks currently.
Right.
Aha, 20% of you guys have voted, so just give you a few more seconds.
Okay.
Okay, so I'm going to close the poll right now. And let's see what the
Okay,
results are going to look
and what do we
like.
get?
The results are, wow, a whopping 100% of you said that you want to sleep. Okay,
Oh, is it?
so
Oh, nice. Okay. Right.
I'll go it back to you, Sam. You can now
All
go
right.
back to
Okay.
dispel these myths.
So it turns out that the audience right now here has more concern about sleeping, and they don't really trade U.S. markets because they want to sleep. But to be honest, it's not that hard, because what I understand, usually the Singaporeans sleep around after 11, around 12 midnight. and the U.S. market, opens around like 9:30, 10:30, and even I mean before the market opens, you can put your orders, based on the general environment, like how is the market going on, the how did the Asian market close or the European market close, and before the market opens, you can put your orders. If you understand the market well, that shouldn't be a problem. So the most important thing is, for the U.S. market is you need to know how the U.S. market works and what are the key features, you need to look into before you can start trading in the U.S. market. Uh, so you might all have heard of some of these products, like Apple, Google, Citi, Zynga, Caterpillar, AT&T, and most probably Facebook. And all these products are available in the U.S. market, either on NYSE exchange or NASDAQ or EMEX. Usually the top big tech companies are available on NASDAQ, and while the other manufacturing companies are listed on NYSE. Uh, so all these uh, products are available. Plus, before I go into those individual stocks, we have this list of world indices and CFDs, and today I'm going to talk about four of the most important ones, which are related to the U.S. market, which are the Dow Jones one, the Wall Street, which follows the Dow Jones futures market, the U.S. SP 500 index, which follows the S&P 500 futures market, and we have U.S. Tech and U.S. Russell 2000, which again tracks the futures market, the Russell 2000 and the Nasdaq 100. To all of the, among all the four, right? Uh, my preference is towards the Wall Street and the SP 500 index, because it actually the Wall Street and SP 500 actually takes a huge market cap of the whole U.S. market, especially the SP 500.
And I
If
think
I'm not wrong, the SP
just to
500
jump
has
in,
this market
Sam,
cap of 15.
just jump in, Sam.
Mm-hmm.
I think the whole point is also that everybody watches the news, and over the news, everybody knows about the S&P 500, how it's doing, as well as the Dow Jones Industrial Average. So as such, because we do have corresponding indices, it's easy for people to familiarize themselves or to trade in these world indices CFDs if they want to diversify into the US markets first, as opposed to going into individual companies such as Apple and
Correct.
even Google. So yeah, just to sorry to cut you off, but yeah, I think that's
Yeah.
what you were trying to say.
The the idea here is, that Wall Street and SP 500, especially SP 500, which has a market cap of about $15 trillion, you know, pretty much tracks the whole U.S. market. And these two indices are very highly correlated with the market. Plus, because it contains the S&P 500 has 500 counters, that's 500 stocks within itself, and the Dow Jones has 30, means it actually diversifies the unsystematic risk of the individual companies. The individual companies have the unsystematic risk with itself, so it minimizes that unsystematic risk, and so it is better, to, like, if you want to go into the U.S. market, to go with the indices, because it's easier to understand indices. They correlate well with the market, and you can use your basic technical analysis, your economic indicators, and all those things to, like, to see, how will the market go in the future. Uh, it Compared to the individual stocks, because stocks, they are more dependent upon their individual news. How is the company doing? Is there any news that's gonna, take down that particular stock down or up, or whatever. But these indices more often go with the general economic, the economy, the economic indicators that we have. So to start with, I think the Wall Street and SP 500 are the best ones. But if you are very bullish or bearish, for the tech, then US tech tracks down the technological, sector pretty well. Okay. So moving on, we have so we currently we have for CFDs, the SGX market, the Malaysian Hong Kong, the Hong Kong market, and the NYC Nasdaq Amex. So we are running this promotion. So here you can see the promotion commission rates going on, from which you can you can start your trades with us with those promotional rates. For further queries, and if you want to look into like which counters have how much percent, I mean, how much commission and all those things, you can actually log on to our website at cfdphillip.com. And yeah, you can have under there you can go to commission and charges, and you can have very detailed commission charges and financial charges for all the markets, including the US market. uh Financial charges for long, SGX 4% and all this, but I'll go with the US market, which has 2.5% long financial charges, and 3% for short, which are very competitive. Yeah. So yeah, and then the best thing is that you enjoy 5 calendar day free financing. So those people who haven't their hands on to the U.S. market or any other market, they can start doing it, now, because it's a good time. They can have 5 days of free financing. So all you pay for 5 days is just the commission, with no financial charges. So here are the indices that we offer so far. And as I already mentioned, that we have four of these indices are based on the U.S. market, the Wall Street, the S&P 500, Tech, and the Russell 2000. Uh, the commissions are very low for indices. That's the best point. And even the financial charges are smaller than if you go to individual stocks. Okay, so it's the same thing. Yeah, I mean, minimum commission for U.S. market will be US $15, and you'll enjoy the reduced commission rate of 18%, 0.18%. Okay, so the question arises, right? Why should we go and trade in the U.S. market? Why not just stay with the Singapore market or any other market? So the first thing about the U.S. market is too big. The U.S. market is the largest market, the financial market in the world, and it's by far the largest. So it kind of like is a kind been some of the traders, they believe it's kind of like foreigner to other markets, because anything happens to United States, affects the whole world. And apart from that, U.S. firms enjoy greater flexibility in the decision making, because they have a kind of huge, huge business sector, and their own uh, things going on, the different sectors, technological sector, the health sector, and all those things. And so it's a huge, actually, it's a huge market in every way, among the sectors and as a whole market. And within USA, the NYSE exchange and the Nasdaq are the two biggest stock exchanges, in which most of the biggest companies are listed. Like you name the big companies, and they'll be either in NYSE or the Nasdaq. And of course, they have high liquidity. You just go and check the live prices, right? It goes up, move up and down so fast. It tells you how liquid they are. Their daily turnover is far bigger than any other market in the world. And all those largest tech companies that already are mentioned, are already listed in Nasdaq, including Facebook. So yeah, you can just trading, within those two indices, the ETF or the indices, you can enjoy uh, trading in all those companies listed within those indices. Okay, so now I'm gonna go towards the ETFs. Okay, so for those who, I'm assuming everyone knows what ETF is. If they don't know it, then they might raise a question here so that I can go into explaining what ETF is. But if everyone understands it, then I will just move on with how the ETF works, instead of talking about the basic ETF thing. So I assume everyone understands an ETF. So the basic idea of ETFs, exchange traded funds, is to replicate something, is to replicate some underlying asset. And in most of the cases, it's usually, the underlying asset is the index. So they try to like track down the actual index so that, instead of people, let's say, who wants to invest in 30 companies within the Dow Jones, instead of going separately, investing their commission and all those, taking huge risks, they can directly go in and buy a, ETF that tracks down the Dow Jones or S&P, and there's a better choice, find economically and in risk uh, way as well. So ETFs can track down anything. It can track down equity. It can track down fixed income, cash market, currency, commodities. Uh, so basically, yeah, the ETFs can track any index, and within the equity index, we have different styles. I mean, which ETF uh, can track. Which let's say a dividend one. A dividend companies are usually mature companies. So there are big companies like GE or General Motors and all those big huge companies which have proven to disperse, the dividends, for years and years. So that can be one style. The other can be can be high, the the high growth companies, such as the tech companies who have high growth rate. So depending upon it, the ETFs can track down the fixed incomes of bonds and different type of bonds, the long-term one, the short-term one, in the cash market. But for us, because we provide the CFD that we have is for the stocks in the Cs. So I'll be talking more about the equity market in the stocks. So moving further, just to like tell you that, that we have more than 600 U.S. equities, CFDs, with us, where you can go long and short.
To
It's a
talk about
huge number
the
actually.
ETFs, just I want to elaborate a little bit further on what Sam has said. We do offer ETF CFDs, so that's increased leverage for all of you who are looking to diversify into particular sectors, especially if you're more familiar with sectors. And this is under the Amex markets. So it's a great time to go in right now if you are thinking of diversifying your portfolio, because as Sam had shown earlier in his previous slides, we're having promotions. So you can we will go soon into the strategies as to how you can actually trade these products while not fearing that you have to stay up and watch the whole thing. So without further ado, we just giving you a summary of although in the US markets there are over 5,000 companies listed, we have over 600 US equities, CFDs, and ETFs for you to long and short. Basically, these are the ones that are more of your blue chips, and it gives you high liquidity. And I'm sure all of you are probably more familiar with these names. So again, it depends on your risk profile, how familiar you are with the US markets as well. Sorry to interrupt, Sam. Back to you.
Oh, it's okay. Okay, thanks. Thanks, Melissa. So as I was mentioned, I was talking about the indices and the equities, right? So as Melissa just mentioned, it depends upon the how much a person has the risk tolerance, how much is he risk averse or a risk seeker. So depending upon it, you can, if you understand the U.S. market well, then you can go to particular companies, and then do trade, But to be honest, the safe thing to do is to go with the indices, which is ETF, which tracks the indices. The ETF, provide you a way to like diversify your investment into many companies. So let's say S&P 500 index, and then you investing in S&P 500, actually you're investing in all those 500 companies. So any unsystematic risk of any particular company, and that company goes down or something happens, right, might not affect you as much if you were only, let's say, long in that particular stock. So that's what you enjoy, uh, in investing in ETF. But those who are risk seeker, they understand the market well, they can go into the individual stocks, and we, as Melissa just mentioned, that we have more than 600 companies, which is a very huge portfolio, because most of the big companies, or the companies that you know of, you want to might go long or short, might already be in those 600 companies, the equity that we have. So as I was mentioning earlier, because everyone here, as I understand, that have problem, because the U.S. market starts late at night, and so they don't want to trade because they want to sleep. Well, as you can see here, the market trading hours start at 9:30 till 4, and right now it's not, because it's a non-daylight saving. It starts around 10:30 to 5. So if you're trading, let's say, an ETF, usually those big news comes around like 8:30 U.S. time or Eastern time, or the 9:30 p.m. the Singapore time. Usually those big news usually around come at 9:30, and most around like 11 p.m., which have a chance of impacting the market. I mean the U.S. market. So if you're up by that time, probably you can look around those in some of the news and some of the indicators that I'll be talking. A few minutes from now. If you understand those things, probably you can look for those particular indicators, or the economy, how the economy works, all those things, and based on that thing, you can actually go long and short in the U.S. market even before the market opens, and then you can keep track till you sleep. It's usually, if there's a good news, before the market opens, it's very common that the market gonna go up, the whole day. So yeah, and the benefit with ETF is that ETF correlates with the market very well. So it correlates with the news, the economic indicators, the particular news, that comes in. So if you are reading the news or watching it, at night before sleep, and you feel, that everything is fine, then you can go long. Or if you feel, that bad news is just around the corner, or you just hear something, Ben Bernanke says something about the U.S. economy, and then the market when it opens might go red, might go down. So then you can keep shorting, and can earn from it. So if there's a whole lot of things you can do before, you go to sleep around 11 or 12.
If you look at the order submission hours, it's from 7 a.m. say
Yeah.
from today all the way till 4 a.m. the next day. So in other words, you can actually put in your orders for, say if you have a longer term view, or medium term, not long term, but medium term view. The news is already out. Markets have already moved in a general direction, and you know that there is a general direction. You can always submit your order the day after the news breaks, during when you are awake at 9 a.m. or 7 a.m. the minute you wake up. But of course, that being said, if you are awake when the market opens at 9:30 or 10:30 p.m. Singapore time, you can always put in your orders, and let it sit. Am I right, Sam?
Uh, yeah, that's what I was talking about, that you can place orders before the market opens, so you don't have to like wait until the market opens. And as I was mentioning, those huge news usually appear before the market opens. So if the market opens, let's say the most, right now 10:30, mostly the news will be up by 11 p.m. Yeah, usually it's around like 9:30 p.m. That's when they release all those uh, indicators, about the employment rate and all those ICM non-manufacturing index and all those things.
Okay, so
So if you keep
just
track,
to paraphrase what you've said, just to paraphrase what you've just said, you mean that, for example, you know that the non-farm payrolls are gonna come out tonight, for example, yeah, it's gonna come out tonight, and general estimates is that employment, it's bad news. So people are expecting to short the market because they expect the non-farm payroll indicator to be bad. So
hmm
a strategy to put in before market opens is to put in a short limit order, right? But if
you don't,
you're
you don't, mhm.
then if you're afraid that the news might be good, then you can put in another limit order on the long side before market. This is all before market opens, right?
Okay, actually, all these news, right, appears before the market opens, so you already know how and what happened. So because these news appear around 8:30, 9:30 Singapore time, so it's usually before the market opens. So you'll know how did it go, how did it beat the estimates or not. So once it beat the estimates, it's a good thing. Then you can already go long then, because before the market open, the future market is already going on. So you don't have to like wait, because these news, when it happens, take down the market up or down even before the cash market opens.
That's
So
excellent.
yeah,
Then I
so
think
you
we
already
are.
know the news.
If that's the case, I think, wouldn't you say that we are in a better position than those in the US to trade the US markets? Because we hear the news first before US opens, before US wakes up, right?
Correct, correct.
Oh, that's
So
great.
yeah, that's what I was saying. Like most of the good news, happens around 8:30 time. Uh, at most it happens around 11 p.m. and yeah, 11 p.m. Singapore time. So you can look around those news. Those news are available everywhere. I mean, you can go to marketwatch.com or any website. Those news will be popping up because these are huge indicators, huge news. And so they take either the market up or down. So when the market up, when the market open, the cash market opens. You already know the news. So based on the particular news, you can either go long or short. And if you're doing it on the ETF, which correlates well with the market news and everything, so there's a high chance that you can earn a lot through doing that. But of course, you need to like take care of other things, other other technical indicators and all those things, before you go in all the way. So I'll be talking, yeah. So I'll be talking now about those the indicators. There are a lot of indicators available for U.S. market, and those indicators do actually impact the whole market, the whole U.S. economy a lot. Some of the indicators that I will talk, will be the FOMC, the Federal Open Market Committee, the non-farm payroll, and the durable goods report. The FOMC, is what defines the monetary policy of U.S. So let's say when Ben Bernanke is giving a talk, and then people will be waiting for him either to say a yes or no to let's say for more uh, like money printing or doing the quantitative easing, all those things, all the good news, so they'll be waiting for it. And as soon as he gives any indication that it's a good thing and the markets start going up, so those FOMC reports and their news are very important. Uh, if I'm not wrong, FOMC means around 12 times a year, or eight times a year actually, yeah, around there. And so before the news is released, you already know that that the news is gonna be coming up, and so that's what you should look for. The non-farm payroll is another very important indicator for U.S. market. It comes every month, the first Friday of every month. So tomorrow you'll be seeing a non-farm payroll. The timing again will be around 9:30 p.m. 9:30, yeah, Singapore time. So you might want to like check this non-farm payroll. and you'll see if the non-farm payroll beats the estimate, right, then the market will definitely, most probably, go up. And the durable goods report are very important as well. The durable good report, but by the way, the non-farm payroll report is for the unemployment change happening in the construction or the manufacturing sector. So it doesn't take into account the household sector, the government sector, and the farm sector. So the employment change happening in the construction and the manufacturing market, it makes a huge difference actually to the economy. And the durable good reports are very important as well, because if the economy is in a expansionary mode, then usually people would be consuming more on the durable goods. And the durable goods here includes cars, refrigerators, air conditioning, all those luxury goods, big products, that you only buy when you have money. So if the economy is doing well, you'll be spending a lot in those products. But in the recessionary mode, right, people will be like more towards saving money instead of like spending it, and so that affects the market as well. So these are only three of many indicators that you can look for. I mean, just yesterday there was this the PMI in index coming up, the non-manufacturing PMI index, and there's manufacturing PMI index. And if you're really interested, you can go on online and search for economic indicators for U.S. market, and you'll find a number of U.S. market indicators. And to be honest, all these economic indicators do determine how will the market go. So if the non-farm payroll is good, there's a high chance the market will go up. So these are very important news, and if you are going particularly in its particular sector or particular company, then apart from the economic indicators or economic news, you need to know about news about that particular company. And is there any government investigation going on in that company, or how much, I mean, how is the situation of the company, or is the company launching a new product or something, or do they have revenue increase significantly? About the particular stocks, right, every quarter they have reports coming in, and that determines how the particular stock will do, go up or down. And on a single day of two or three huge companies, their particular company reports are not good. Let's say they don't happen to beat the estimates and their revenues are not good enough, then those four or five big companies might take down the whole market, down. So you need to look into all these things, like in order to like see, because Nasdaq is more based on Apple and all these tech companies. So if you are being long or short in Nasdaq, then you need to understand and know, like the big tech companies, how are they doing? Usually for every quarter, let's say the quarter will be ending this December, so they'll be putting reports starting late February, March. They'll have this report until you can look into that time period, and then can look into particular companies and can see, how and what the analysts say, before you make decisions. So and one so now I already talked about the economic indicators, the fundamental analysis, which is checking the company news and how are their revenues and all those things. There's how leverage, how strong the company is. Those are the fundamental analysis. And apart from that, when you're doing a short-term trading, these technical indicators, those technical analysis forms a huge part. Fundamental analysis is very good if you have a long-term time horizon, But for short-term, for like 2 days, 3 days, you might want to do a technical analysis as well, because technical analysis tells you, how many people, how much is the volume, and are people really willing to buy this particular stock a lot or not, or how does the price moves on. And right now here, this uh, this graph only shows you the uptrend that the market is going up. There are a few ways, you can look into like how the technical indicator works. I assume for those people who opens a new CFD account have a chance to actually uh, go through a separate course based totally on the technical indicators. If I'm not wrong, Melissa would better know about this thing. Melissa, can you
Well,
just confirm me that
yes,
those new
if
clients,
you
what we
if you're
have,
a
can you
new
just
client, you are entitled to a 1 day technical workshop. So you can read off the technicals. And I think what you're trying to say with this graph is actually, besides knowing the individual news about what's stocks in play, you also have to look at the big picture, which is the SPY here. So the SPY is an ETF on the S&P 500, and as Sam mentioned earlier on, you've got S 500 big companies listed on the S&P 500. So it is a good indicator for you to look up before you trade your individual stocks, because although these stocks are so-called in play because there is fresh news on them, you also need to look at what the market is telling you. So this is where your technical analysis will come in.
okay? So yeah, for technical analysis, as we just mentioned, you can attend those classes, which is very important, to understand how to use simple things like moving averages or MACD or stochastic, indicators, which, so, I mean, most of the time tells you is the market overbought or oversold, or what is the best time to like sell or buy. It gives you indication, like let's say the moving averages, if it cuts from the bottom uh, to the price, usually means that it's a good time to buy now. So if you're a short-term trader, then I think I suggest you to like look into the technical indicators and technical analysis as well. And to be honest, those economic indicators that I was just talking about actually impact these technical indicators as well. And because this SPY is an ETF spider, the S&P index, it tracks the S&P index. This, let's say, because it's an ETF which is tracking down the whole market, the S&P 500, which tracks down the whole market. So if there's a good economic news, coming in, then you'll see a uptrend, going, the price is going up, people buying, wants to buy. And then at that particular time, I mean, it's a good time to buy, but at what price should you buy? That's another question that arises. And these technical analysis, solves some of those questions by telling you what is a good price, you should look at right now, or what are the prices. I mean, what are the profit, that you just take and then just let it go. So those things you can understand through this technical analysis. Uh, for U.S. market, especially for the indices, right? Technical indicators have huge impacts. I mean, you can see and judge, when to go and when to come out through the technical indicators uh, better than what you do it for the individual stocks. So as I was mentioning, that Spider S&P 500 Index ETF Trust is the first ETF ever launched. Uh, uh, I think it's by Vanguard, if I'm not wrong. The first index, and you can see that how it tracks down the market. The red line here, if you can see on the graph, is the S&P 500, and the blue one is the ETF, the SPY uh, ETF, and you'll see, they very highly correlate to each other. And then the reason is because this ETF, the Spider, actually tracks down this S&P index. So you'll see a huge correlation. So if the market going up, if the S&P 500 index going up, you'll see the Spider uh, S&P 500 ETF also going up. So in investing, the best thing about ETF over any other closed-ended or open-ended funds are that ETFs provide you liquidity. So you don't have to wait for the closing price. If you want to, let's say you bought some ETF shares, you want to get rid of it. So unlike those closed or the open funds that are available, like the open mutual funds that are available that might also track the same index, unlike those, you can sell anytime you want, and in any given time, the price is determined by the market. Unlike the open funds or the closed funds, which the prices are determined by the net asset value closing price. So here, I mean, the market liquidity for especially for these like the Dow Jones and the S&P indices are very very good, and you won't have any trouble, like selling or buying these products, on an exchange. So that's a very good advantage of ETF, using ETF rather than using other mutual funds. Plus the fees are minimal, because if you are buying a mutual fund, then you need to like pay for the management fees and other distribution charges and uh, other load. I mean, they are usually called load funds because you need to pay upfront charges, selling charges, a lot of things. But in ETF, all you need to pay is the commission charges. And if you're using these ETFs, the CFD, then for 5 days, you don't have to pay for any financial charges. So basically, for 5 days, it's only the commission charges. And yeah, so that's best advantage. And then of course you can leverage your profits and losses through using CFDs. Uh, okay, next is to look at the long-term technicals of the stock ETF. This is the same thing. I'll continue the same thing. That it depends upon, like, if you want to use technical indicators. It depends. Is your time horizon long or short? So if, let's say, if it's short, then you might be watching a 5 minute chart or 1 minute chart or an hourly chart, depending upon how much your time horizon. But let's say if you want to go long on some particular counter or ETF, for 6 months period or a year, then your time for technical analysis might be a daily chart that you would like to use. And as I mentioned, once you open an account, I would definitely suggest you and recommend you, to go and take the technical class, which is very good. It teaches you basic, but it's a very good class, to go to start with, and then you can develop your own technical skills, once you know the basics. So of course, I mean, I cannot go through all the indicators, all those analysis right now, but we have few in the technical analysis. We have few which looks for the reversal of the trend or the continuation of the trends, like head and shoulder pennants or flags, and those they have few things, you should look into, which tells you how the market will we either gonna go the same way or gonna change and do a reversal or things like that. So I would suggest you have to open an account and take that class. Yeah. So this is what you will be using if you are doing it, seeing a chart, let's say, so you can see the volume is very good in millions, and the price right now is going down for this particular counter is a daily chart. So this is how it goes. Uh, But yeah, I mean, okay, it's the same thing. I mean, as I don't want to get more into the technical analysis part, but this again chart shows you that the resistance and the support lines, and if you can are capable of building the resistance and support line, then probably that resistance and support line suggest you and tell you what are your risk taking and loss cutting. Prices you are usually better take your profit and go let go of the counter, or take a take a take a stop loss cut or whatever. So as I mentioned, we need like do more to go through the classes so that you can understand these basic stuff so that that will help you out better trade, because these are very important things. But luckily, we have this thing on our poems, called chart whales. And for those who are very beginners and they don't know anything about technical analysis or about the market, and they want to know or get any suggestion or opinion about like how the market will be doing, in the future, we have this thing called chart which you can opt through your poems account under, I think it's under rewards in points. I think under there you can go and opt for this thing. This chart which actually tells you, that how the market expects to be doing. It tells you the technical events. That tells you the opinion of different analysts. Like the eight are bullish and then nine are bearish on this particular uh, counter, the Noble Group counter that we see on the graph. I mean, right now. So it tells you, I mean, for those who can build those support and resistance lines, as I was mentioning before, they can use this facilities. Like, it's a very good feature for those new uh, beginners, novice traders, and it's also very important. I mean, this feature is also very important. I mean, once you know all those things, then you can actually compare your analysis with their analysis and see how you're working, and once you are good enough, then you can build your own opinions and take, positions in the market, on your own analysis. But this feature is very good. Tells you the stop price, let's say for long position, for short position, and how the market are doing, the bullish or bearish, so it helps you make a better judgment, in this session. And for the US market, okay, we have for the US market, we have the DMA market actually. So anything you buy or you sell impacts the market. So by using the CFD that we have in the US market, in the SGX as well, you can actually make impact in the market. So let's say those huge investors, they actually want to like impact the market by going long or short in some in particular, counter or an ETF or an index or something. So this DMA model, provides better transparency. I mean, you can see your order right into the exchange. So that's just another good thing. And one more thing, for with the New York's with the NYSE, AMEX, and Nasdaq, which are all American uh, stocks, the exchanges, from which you can trade stocks. They have limit orders, top limit order, and market order. So we have three most important orders available for these market. So the limit order is, let's say the market is right now $30, and let's say it's 550 for Apple. Okay, I'll just choose an example of an Apple. So let's say Apple right now is trading $550. Uh, the limit order, if you want to buy, would be something about 550. So let's say you say, okay, I want to buy this Apple share for 555. So you can put in order, a limit order, even before the market opens. You can put this order so that when the price touches that price, you'll get for that price. The market order is, whatever the market is, you just shoot an order into the exchange, and whatever the price you get, is the market price for you. The stop limit order is, it has a limit feature plus a stop feature triggers your order into the exchange. So let's say you want to buy, let's say, Apple shares, right? But you want to only buy Apple shares if the Apple shares goes above 555. Right now it's 550, the market price is 550, and you only want to buy it after it reaches 555 because you think if it crosses, as a trader, because this is very important. So you do your technical analysis, and now you think, that once it reaches 555, it breaks this resistance and it will continue the uptrend, this what you think. So you can use this order where you can put the stop price at 555 and the limit price can be above 555, let's say 556 or something. So as soon as the market touches 555, your order will be shoot to the exchange so that you can so that if the market even goes further up as you were expecting to 556, then your order will be done. I usually prefer limit orders or stop limit order over the market order, because for the market order you never know at what price you're going to get the order. You might be seeing 555 just now, and as soon as you place a market order, the price you might get might be 557 or 558. So yeah, so if you're going long, then usually the limit order and the stop limit order will be below the market price. And previously when I was talking about the 556 and 555 thing was for short. So if you want to go short, then you place more than above the market. Okay. So here's we have our platform, CFD Trader 2 platform. You can actually log into our website and then can go to the Phillip CFD Trader 2, and there's a video. You can actually watch that video. You can once you open an account, by the way, so you can download the CFD Trader 2 platform on your computer and then can use it. We have currently we have few platforms that you guys can use. Well, first is the Poems one, which is a web-based application, so you can use anywhere, anywhere, if you have access to the internet. And this is the uh, another platform which you need to download and use, download onto your computer and then use it. Then we have CFD mobile, which on iPhone you can use CFDs, and plus few weeks ago, like we launched for the iPads as well. So yeah, you can trade CFD with all those platforms. Uh, the the advantage, I would prefer CFD Tutor 2 over Poems, because CFD Tutor 2 has better uh, charting facility. Plus, it has it has more features, more synthetic order types available than the Poem. So yeah, if you're interested, then I'll suggest to use CFD Tutor 2. In fact, most of our clients have already changed and transferred to the CFD Tutor 2 because it's more user friendly and you can do a lot of things. That is another advantage of it. So the whole talk goes back to from where we started, the reasons people don't trade. So now why and how you can actually trade and participate in the US market, even uh, even though it's at night, and you can participate in and take a good sleep as well. If you know all these things, economic indicators, the fundamental analysis, how to do it, technical analysis, and you do it, and you watch news. Watching the news is very important, as a trader, or if you want to trade. So if you know all these things, you do all these things, then it's good that that you can actually participate in the market and place your orders before the market opens, or even if the market opens at 9:30, and usually people sleep around midnight, so that you'll have a general you know uh, indication how the market is going, and then you can place orders, and then can go and take sleep, in the morning. You'll see whether the order is done or not, based on the market. So this thing is not a problem anymore. I hope so. So for the U.S. market, okay, one more thing. For the U.S. market, when you get your account for Poems, right? For the U.S. market live prizes, you need to actually go and opt for these U.S. live prizes, because by default, the U.S. prizes you might not get for the live prizes. So you might have to go under reward program and might have to opt for this feature so that you can have live prizes, live US prizes for all the three exchanges that I mentioned: the Amex, NYSE, and the Nasdaq. And in order to uh, to deal in the US market, you need to sign this form W8 ban. This is just to tell and that you are not a U.S. citizen, you are U.S. or Canadian citizen, and so that you are eligible to like trade in the U.S. market through us. Uh, and as I already mentioned, we have now the Phillip mobile, so you can use your iPhone or iPad, and what I understand, early next year we'll be coming up with an Android app as well, so that you can those Android users can also trade through their mobile, and yeah, you can get live prices. I mean, here on your app, so wherever you are, you can get the prices, you can place orders, and the best thing with us, if you are outside, you don't have phone with you, you can anytime, call us, yeah, if you don't have like smartphone like iPhone or Android and you cannot do it yourself, you can call the CFD dealing desk, and we have almost 24 hours dealing desk to take on your orders. Uh, so yeah, you can call us, and again, this feature is for free, so you can just call us. We won't charge anything. So, uh, and these are some of the for if you're a frequent trader and you trade a lot, then you get a few things, uh, yeah, so if you're a frequent trader, then you can opt for these things. I mean, once you qualify for that trader, frequent trader, then you can get all these things mentioned here, like 200 stock alert, SMSs, and special commission rates, and 1 month online news, and all those things. So this might be a good thing as well. And I think we are about to end the presentation. Uh, Yeah, so just a general guideline, like before you start trading, as I mentioned earlier, just at the start of my presentation, that to understand the product is very important, and to understand the risk involved is very important. So when you start trading CFDs, please read everything, all the risks, that you might encounter, because although you might not encounter all those things written in the risk, but you should be aware of it, it's highly leveraged, and what are the things you should look for, and so that would be a good thing to do before you start trading. And you can always ask your trading representatives, your dealers, if you have any problem regarding anything, you can just give us a call, check with us, you know what risks are involved and where to look for. Usually everything is available on our website. If you go there, there's an info sheet which you can look through. uh, so yeah, so you can actually go through the info sheet and can look through all the things, the calculation, how do we calculate the commission, the financial charges, everything. So it's always good to like know before you go into anything, right? So I would suggest like read all those things, and any problem, just give us a call so that we can help you out, better understand the product. And so now is yeah, I'll pass this session out to you. If you have any questions, any queries, you can ask me. Yeah.
Yes, please feel free to raise your virtual hand, or you can also type in your questions. If there is anything that that you don't understand, or you would like some clarifications, please feel free to ask them. Just to add on to what Sam had said, if you have any other further queries, you can also go to our website, phillipcfd.com. There are a lot of educational videos. So, as Sam said during the beginning of this presentation, the assumption is that you already are a beginner. You have already started trading CFDs. So, this is meant more for an intermediate user or intermediate investor. Again, we also assume that you already have technical analysis. So some of the strategies that Sam was talking about earlier on, about how you can look out for stocks that are in play by looking at the news indicators. All these are big picture. Then you narrow down onto the from macro to micro, and then you use the stop limit orders, or even the market orders via CFD trader or mobile, so that you can sleep easy. So you remember, golden rule is to always put in your stop loss, which is the stop limit order. And you can do this anytime, almost anywhere. Okay, we've got a question. For
Okay.
USA stock CFDs, I could say that there's only OTC CFDs, no DMA CFDs. For US, all our CFDs are DMA, as Sam had said earlier on. So your orders for US equities or even the Amex does enter the order books in the US. We do send a corresponding order into the US markets.
Although the US market on our platform shows under CFD shares, but all the CFD counters, available either on NYC, Amex, or the Nasdaq are actually the DMA order. So you trade in any stocks, any index or anything, you're right, it will be actually sent directly to the exchange. So you'll see your order right on the exchange, and it will impact the market as well.
Okay, so are there any other questions? Does any I think it's pretty clear. If the most important thing is that you need to get your trading plan, and then if you are your trading plan should take into account your entry, your risk management, and because we do have these so-called more advanced order types on available via different platforms, you can put in your order anytime and be rest assured. So we'll just wait for a couple more minutes for people to type in their questions.
Oh yeah, sure. I mean, you can ask anything you want regarding this CFDs, ETF, anything about trading, anything about economic indicators, technical analysis, fundamental analysis, anything you want to know.
Well, looks like there aren't any more questions. Sam, that means your
All
presentation
right.
must have been really comprehensive. We'll just do us a favor, sorry. When we exit this webinar, there is a short survey form. We would just like to know, how did you enjoy this webinar? How can we improve? And what more would you like? What kind of topics are you looking for in our webinars? So if there are no further questions, we're going to end this webinar. This is recorded, and
All right.
the recording of our previous webinar is also up on our website. Again, it's phillipcfd.com. I am going to type in the address just in case. So just another reminder, if you intend to trade the US markets, you need to apply for the live prices in order to see the live charts. And you can do this via poems.com.sg, and you can just apply for the non professional US prices. This is completely free. It's just that you need to apply for it. If not, all the prices are 15 to 20 minutes delayed. So, once more, thank you for your patience and for your time. We look forward to seeing you at our events. In fact, next year is CFD's 10th anniversary, so we do have a big celebration with a big Asian market outlook on the 19th of January. Please mark your calendars down, and you can register for it on our website again, phillipcfd.com, under education. Entrance is free for this particular event. So we look forward to seeing you there. Thank you once again and have a good evening.
Yeah, thanks a lot, everybody, and yeah, thanks a lot, Melissa, for
No
moderating this
problem.
whole event.